Hi everyone, welcome to another honeystocks.com weekend analysis, and this one's going to be going out on the 2nd of January 2021. Happy New Year to everybody. Now, I'm being asked a lot, what can we expect with the market going into January? Now, as always, I've got a lot of charts prepared. I'm going to be switching over to my screen share in just a second. But something that I do like to communicate right off the bat is my work is not geared towards day trading. I am not a day trader. The work that you're about to watch is geared towards a time horizon that's generally weeks, sometimes months if we're in a particularly good trend. And hopefully you get some insight into the professional technical view. I do see a lot of nonsense out there, a lot of individuals that sound very smart but are possibly not, spreading a lot of misinformation, and I think it's very, very important to focus on what the charts are telling us, to focus on what the price is telling us. I'm not someone that uses economic indicators, I'm not someone that uses jobs reports, anything like that. I'm focusing solely on price. I'm very, very technical in my approach. So if you do like it, please do subscribe. Bottom right hand corner, there should be a little red button. And if you get some value from it, give it a like as well, because it all helps with the YouTube algorithm. And I do this for absolutely nothing. So let's dive into the charts. Let's see what the market's telling us. And hopefully we can kind of deconstruct what is likely to happen going into January. Now, before I dive into the charts, please do pause the video, make sure you're comfortable with that before watching any further. Basically says that there's not any investment advice, and as always, do your own due diligence. As most of you already know, I'm registered with the CMT Association, working my way towards my chartered status, and technical analysis is something that I'm very widely known for in professional circles. To carry on from the back of the last analysis that was provided to social media 4 weeks ago, these are the charts that were talked about, and this was the performance. If you do get some value from this, as I said at the start, please do subscribe to the channel. Now, where I want to kick off with the analysis, as always, I'm going to spend 5 minutes talking about the overall market, and then I have around 20 to 25 individual stocks, charts that I think you should add to your watch list and do your own due diligence on. Now, we're going to start off with the S&P 500 index. We can see that we're making new highs. Now, for those of you that followed the last analysis 4 weeks ago, you'll know how I highlighted the seasonality and how it held true last year for the drops in February, June and September. Well, what can we expect in January? Well, going back 70 years, we can see that January, on the whole, the average performance throughout January is generally positive. Now, that doesn't mean that January is absolutely guaranteed to blast off higher into the sunset. But what it is a decent little data point for us to be able to use to, I guess, give us the confidence that if we're bullish in a bullish market, when markets are making new all-time highs, which, contrary to what many think, it's not a bearish signal. You have to be bullish in the market at this point. But something that I do understand is the market breadth. Now, when we look to past history and we look at the percentage of stocks that are trading above their 200 period simple moving average, we can see that when we get into this 90 to 95% range, we can see a deterioration in breadth. Now, as we can see here, when we look at January 2021, we're approaching a level in the market where it just kind of says to us, look, we're in a bullish environment, but given what we know about past history, although the market can keep rallying higher and we can see a deterioration of breadth, it just tells us that we may have to be a bit more selective moving forward. Now, when we look at the Dow, we know that the Dow hasn't reached overbought conditions yet. Now, I would really like to see that, because that's a characteristic of a bullish environment. We know that the Russell 2000 is in a massive uptrend at the moment. Now, the small caps, it should be said, did take a little bit of a hit over the Christmas period. Again, very, very normal. We get pullbacks and uptrends. It doesn't mean that we should be shorting stocks. What it really generally means is that it gives us an opportunity to add to winning positions, or, as most of you will have heard me say many times in the past, pullbacks and uptrends oftentimes offer opportunity, and I think that's exactly what we're seeing at the moment. We've got technology making new highs as well. So again, when we put it all together, what we're essentially looking to do is just identify the market direction, and overwhelmingly at the moment, when we put all the data together, the market is in a bullish environment. So if we're in a bullish environment, we should be looking to buy stocks, not sell them. Something that I've been on top of over the last few months is the correlation between the US dollar index and the S&P 500. This is what is called an inverse correlation. So what is driving the market, in my opinion, at the moment is the US dollar index. As the US dollar index is going down, as we can see, it's an exact mirror image of the S&P 500. So if we continue to see weakness in the dollar, it wouldn't surprise me in the slightest to see this correlation hold true and for the S&P 500 to move higher. What would be a slight concern for me in my process is if we start to see the US dollar index rally higher. We know that with these correlations, they can be removed at any time. The market just does what the market wants to do, and I fully accept that. But as it stands at the moment, we do have a very strong correlation. So I keep a very close eye on the US dollar index, because I think it's what's driving the moves in the market that we've seen recently. Now, the small caps have got a lot of attention. Now, I feel like I've talked this chart to death over the last few months. A lot of questions get asked as, well, why are the small caps massively outperforming technology and the S&P 500, etc.? And to me, it's all very, very logical. I've been on top of this since the end of August, start of September, and it was one of the factors that prompted me to start to look at small caps as an area of potential outperformance, and that's exactly what we've seen. This is what's called a relative chart. So what it tells us is that small caps is relative to the triple Qs is likely to start to outperform, and that, again, that's exactly what we've seen. We are still seeing a drop off in volatility, which, again, given the correlations, when the volatility is ripping higher, we know that that's a characteristic of a market that's struggling and moving lower. And likewise, when volatility is dropping lower, we know that that's a characteristic where the overall market is generally rising. So I'm quite pleased to see what we're seeing with volatility at the moment. It does continue to drop off, so I'm very, very happy, because again, that gives me more confidence that the market is likely to continue moving higher. Growth stocks versus value stocks, again, for me, there's not any real debate. I think if you turn on CNBC, Bloomberg, and listen to a lot of the nonsense, I think there's a lot of analysts that look at things like economic indicators, etc., that are calling for a move into value. Again, that's not the game I want to be playing. I do what the chart tells me. Provided we're above this line, I think we still have to be looking at growth stocks, because we are above the 2000 highs. Now, areas of focus moving forward over the next week or two. Now, I think, as I said before, pullbacks and uptrends oftentimes offer opportunity. So I think software names, again, it's not rocket science here. The stocks, the areas that have worked in the past that are performing well. We know that with big bases, we get big breakouts, and that's exactly what I think we're seeing here at the moment with IGV. We've got the communications services sector. We've got notable holdings here. I think we're breaking out, we're consolidating a little bit, and ultimately the path of least resistance for those names, in my opinion, is higher. We have emerging markets. Now, let's just go ahead and call this 40% China. I think we're at a logical level where some of these names may pause a little bit. However, if we get a breakout in emerging markets, which I fully expect, to happen over the next week, 2-3 weeks. It's going to happen eventually. What we would be looking to do in that case is start to identify the strength within those areas. I think it's very, very important to filter out the news, because if you watch the likes of CNBC, Bloomberg, it's all negative headlines with China. There's so much negativity, but when you look at the charts and when you look at price, you can actually see what is going on. And what's actually going on are the stocks aligned with these areas of the market are being bought, they're not being sold. So that's why I don't pay attention to the headlines, because oftentimes there's an agenda, and when we focus on price and what the charts are telling us, we know that stocks are being bought, they're not being sold. And that's quite often accumulation by the big money. So that's why technical analysis helps me. It helps me to filter out all the nonsense of the day. We've got the clean energy ETF. Again, if you've not been on top of clean energy over the last few months, since we had this breakout, there has been an incredible amount of opportunity in the space. I've got some charts prepared for you today. We've got solar. I talked about this 4 weeks ago, how I was expecting a little bit of a pause, but ultimately a resolution higher. And again, that's exactly what we've seen. The solar names have been ripping higher over the last few weeks. And that's a characteristic of an uptrend, not a downtrend. I don't like to put any limits on how far a stock might go. You have a process, we have our trailing stops in place, and you just buy your stock and just let it run and see how far it will go. A chart that I put out to social media this week was the chart for XLU, which is utilities relative to the S&P 500. Now this is a logical turning point. If utilities, which I need to add, are more than capable of ripping 15-20%, just as much as your average tech stock. If we do get a failed breakdown here, we know that with failed moves, we can oftentimes get fast moves going in the opposite direction. It hasn't escaped my attention that I posted this chart on the 26th, and it hasn't escaped my attention that over the last few days, utilities have been the area of the market that you've probably wanted to be. Over the last few days, the utility names have started to move higher. So I'm looking for a failed breakdown here. And if we get that, we could be off to the races with utility names, and hopefully we can get a rip higher. Now, that leads me on to the individual names that I want to talk about this week. Now, what I would say is, if there are any disclosures that I need to make with regards existing positions, any positions that we have recommended to clients over the last week, then I will do so. This is one of those disclosures. We've provided this chart for Amazon this weekend in our client analysis. I think we're close to a resolution here. We know that with uptrends, we can have these consolidation or continuation patterns, as some of you may understand them as, and ultimately it does look like Amazon is gearing up for a potential breakout here. Will it happen this week? I don't know. Will it happen next week? I don't know. But it does look like we're moving closer to a resolution with Amazon, and the path of least resistance is higher. I would like to see it break out on a relative basis as well as an absolute basis. So I think Amazon, if you're not watching it now, it's been doing nothing for the last 6 months, but I think there's a possibility here that we do resolve higher. I do have a disclosure here. I own Antero Resources, AR. We've had a very strong breakout, and I'm looking to add to my position on a breakout above $6 here. So again, I have my process, I've got my trailing stop in place. So again, I think AR above $6. PagSeguro Digital, I think we've broken out. We're above a logical level of resistance here. It does look like it's consolidated and held. So I think we can be bullish above $53. Now, further disclosure on this, MGNI, this is a stock that's been recommended to our clients on a breakout here. And again, we've provided another update to this chart this weekend, and I think there's a possibility that we're building a potential bullish flag. So with bullish flags, we know that we just need to break above the previous high, and that gives us confidence that we're dealing with a continuation pattern, and ultimately the path of least resistance is likely higher. Peloton. Now, I sold my position in Peloton when we reached this level. That was my plan for the trade. It has immediately broken out. So, you know, it has left the building without me, but I have reallocated that risk to other positions. But I am no longer in Peloton. Many of our clients and members are in Peloton, but we have broken out. It is consolidating above 150 here. So ultimately, again, provided this level holds, I think there's and you know, some of you will be laughing, but these Fibonacci levels, it's not rocket science, 12th century mathematics. You've all heard me talk about it. For some reason, price just gravitates towards them. So I think provided we're above 150 here, above this Fibonacci level, next logical target 200, round number, and then 230. ENPH, going back to the solar theme that I was talking about a second ago. Again, 12th century mathematics. I think if we can get a breakout here above 180, again, we've got a big next level here. This is a chart that we posted an alert for way back. I think it was like 40 bucks or something last year. And it's just been on an absolute rip. So yeah, ENPH, I think you can continue to be bullish. Disclosure, this is a stock that was recommended to our clients and members on a breakout above $100. Now, it's taken a few weeks to get going, but again, it does look like Taiwan Semiconductors is starting to move. I think one of the questions that I get quite a lot is, you know, let's say, for example, you want to, you know, allocate to the semiconductor space. You know, a lot of you will be wondering, you know, well, if you want to buy semiconductors, you know, what should I be buying? One of the things that I like to do is kind of just compare two of the bigger names. And, you know, when you look at semiconductors, they don't really get any bigger than Nvidia and Taiwan Semiconductors. Now, aside from the fact that Nvidia is in a massive sideways consolidation options killer range, what we can do is we can use charts like this. Now, this is what's called, again, the relative chart. So what I'm doing is I'm literally comparing Nvidia with Taiwan Semiconductors, and because Taiwan Semiconductors is the first in the ratio, what we can do here is we can say, well, Taiwan Semiconductors is outperforming Nvidia, therefore I should be buying Taiwan Semiconductors and not buying Nvidia. That's how I like to use technical analysis. Both, you know, incredibly good companies, great companies, but when we look at technical analysis, we can say that one is more likely to move than the other, and this is how I use the relative charts. And, you know, at the moment it's overwhelming for me. At the moment, I would rather own Taiwan Semiconductors because it's outperforming Nvidia. And if we're looking for outperformance, which I'm assuming, you know, most of you watching are generally looking for, then I think Taiwan Semiconductors makes a little more sense at this point than Nvidia, although, like I said, both great companies. Plug Power, disclosure, I have multiple positions running along this trend, and again, going back to what I was saying at the start, pullbacks and uptrends oftentimes offer opportunity. Now, I have added to my position this week in Plug Power. Ultimately, I should also add that when you have multiple positions running along a trend and we have to deal with these monster pullbacks, it's not for the faint of heart. It's incredibly stressful. I had quite a stressful week with Plug Power and another one of my holdings, Pacific Biosciences. Ultimately, all positions are still intact, but when we get these pullbacks and you have added multiple positions, it does start to get very, very stressful. So I've had a stressful Christmas period with my stocks, but ultimately the positions are still intact. I trust my process, and we'll see what happens moving forward. But again, pullbacks and uptrends oftentimes offer opportunity. lots of questions about Alibaba. We have had a monster breakdown here. Again, we've got a lot of the China headlines, etc. It's all negative, but something again that I would urge everybody to do is observe the technical levels. You know, Alibaba ripped 16-17% here, and the negative news headlines were all over the place. But what was happening? People were buying Alibaba. I think this is a very key level here. You know, the 200 period simple moving average and the breakdown level. Something to highlight with a stock like Alibaba. I think we all understand that, you know, there are great companies that, you know, great fundamentals, etc. I think Alibaba probably fits into that category. It's a juggernaut of a stock. However, sometimes with, you know, these big names and the perceived great companies, if the name becomes too stressful for you, which it is for, you know, a few of our clients that have significant funds invested in Alibaba, you know, I'm constantly dealing with questions on Alibaba, and my message is generally always the same. And for me, the stock is just way too stressful to own. I would much rather be invested in areas of the market that are less stressful, nice smooth uptrends. Alibaba is prone to these 20-30% declines. It's not for me. Doesn't mean that, you know, there's anything wrong with owning it. Like I said, it's a great company, and you know, I don't tell anybody how to manage their funds or anything like that. But you know, sometimes you have to weigh up. You know, what do you prefer? Do you prefer the stress, or would you rather have a nice smooth uptrend? And for me, Alibaba doesn't fit the characteristic of a stock that I would like to own. Again, same for Salesforce at the moment. Great company, but it's just chopping about sideways. Now, there's a very key support level in place here. I did talk about this chart 4 weeks ago. I basically just said, look, I think this is a decent support level. If you're looking to buy Salesforce, this isn't a bad spot to buy it. Now, ultimately, over the last 4 weeks, it's done a whole lot of nothing. So again, I think you can continue to hold it, maybe accumulate, buy it. But for me, I wouldn't be taking any chances. If I was using technical analysis, I wouldn't be taking any chances below this level. For those of you that like to dollar cost average down, etc., again, it's not my game. There's nothing wrong with that approach. It can work on great companies. I would firmly put Salesforce in that category of a great company that you could potentially dollar cost average down on. But again, for me, it's all about technical analysis, and I think below this level, it's not really for me. Update to the Roku chart. Again, I called this one 2 months ago. I covered it 4 weeks ago. I'm covering it again today, and price has paused at a logical level. If technical analysis is your thing, this is a very logical area that you would want to profit take on, especially if you're holding things like, you know, call options and time decays working against you, etc. But again, for me, Roku is now off the menu unless there's any kind of significant pullback, which I think you can ultimately buy. For me, it looks more interesting now above 370. Bloom Energy, it does look like it's gearing up for a potential breakout here. We like it above 3150. The pullback in Uber, again, I think can be bought. I think it's as long as we're above this trailing stop loss level, I like it. I like Uber a lot. It is taking a bit of time to get going, but I think ultimately if we're above $50, it's probably a stock that we would want to own. Again, I've covered Square a few times now. I think continue to be bullish above $200. I think any weakness again can ultimately be bought. We've got Kirkland's Inc. Again, we're in an uptrend. We've got our trailing stop in place. Yes, it has pulled back over the last few days. I know it's not fun when we deal with these pullbacks, but ultimately, as long as the technicals are being respected, you can continue to be bullish on Kirkland's. Nuance Communications, we've had a monster breakout. I covered this one a couple of months ago. Now it is consolidating, being accumulated, whatever you want to call it. Ultimately, if we look at the trend here, that trend is better looking than Mila Kunis. and ultimately I would expect the continuation to move higher. Chewy. Now I've only got a few more stocks to go. I think with Chewy, I have had a lot of messages on this. Again, I covered this one 4 weeks ago on this breakout. It's had a monster move. I like to pay attention to these classical round numbers, if you want to call it. They help us with risk management as well. So once we start to rip higher and it moves above $100, quite a good way to kind of manage the position is to just kind of move your stop loss up when it moves above these key levels, so that if we do get things like a failed breakout or a head fake, it kind of just helps to preserve the profits. The reason I'm highlighting it this week is we know pullbacks and uptrends oftentimes offer opportunity. The 20 period simple moving average here might be a level that you might want to consider buying back in again. Ultimately, we want to see it break out consistently above $100 and keep moving higher. But I did want to highlight with Chewy the round number concept and how it applies. Yeti hit a logical level that we would expect it to meet resistance over the last couple of weeks. It is pulling back, but I would like to see it pull back probably to somewhere around $63, and then hopefully we can continue nice smooth uptrend. We've had a breakout in Snapchat. I think we can be bullish above $45, but what I do like is that we've had a big breakout. We are above the $50 round number. It has consolidated over the last few days, and ultimately with Snapchat I would hope to see it to start to move towards $70. Fiverr International, again, nice smooth uptrend, but it is stalling over the last few days. I think what I would like to see here is a strong move above $200. I think if we can get a move above $200 on above average volume, and hopefully a bit of momentum comes in here, then that would be a signal for me that Fiverr would be a stock that I would want to own. I really like the website, the product, what they do. I have used them a few times, and yeah, I think it's a great stock, great company, great trend, but it's just taking its time here. Disclosure, I own SailPoint Technologies. This was a stock that was recommended to our clients on a breakout here above 50. It did advance quite quickly. It has pulled back, but again, I think pullbacks and uptrends, you know the story by now. So again, provided these levels are respected, which I would hope they would be over the next week, I think SailPoint is a stock that you might want to do some due diligence on. We've got Apple breakout potentially above 140. Again, disclosure, I think most of us probably own Apple at this point. I have a few positions on Apple. This is one of those stocks that I'm happy to hold for life, I think. But again, breakout above 140 might be interesting technically. Netflix, covered this a few times. I think we're in a massive sideways consolidation range, and I think we've got a logical target here. Now, of course, if we reach the upper level here, what we would like to see is an immediate breakout so that you're not profit taking too early. But what this does help us with is if you do get the rejection again, or you start to see a candle forming that's giving you a reason, I guess, to profit take, then profit taking is quite often a good thing to do when we're using technical analysis. Pinterest again is holding firm, beautiful uptrend. It's pausing, consolidating, but again, I think a pullback offers opportunity. Exactly the same for Nike. We've got MGM again consolidating, and ultimately the path of least resistance there is higher. Now Teladoc is interesting because the chart is actually very, very similar in my opinion to something like an Amazon, where it's just in this sideways grind where it's killing all the call options. But ultimately this is a weekly chart, so we have the 50-week moving average here. I think it's acting as support, and ultimately again, I think the path of least resistance, if we can get a breakout here, I think it would be a stock that could advance quite quickly. Disclosure, I own Riot. This is a stock that's been recommended to our clients, members, on a breakout here. And we've discussed it many times on this move higher. Again, I think with Bitcoin this weekend on an absolute rocket ship, I think it's up at 31,000, 32,000 now. You would expect, if that was to continue over the weekend, you would expect Riot to open up quite big. And we also have Stoneco Limited. We've had a breakout here. We're rallying higher, and I think the path of least resistance takes us to around $93. Now, if you've had any value from that, please do subscribe, give the video a like. If you're somebody that doesn't really understand technical analysis, or maybe you're looking to advance your knowledge, then feel free to stick around for a minute. But yeah, I think something that I wanted to just kind of run you through is what we do at honeystocks.com, what our memberships provide. With our memberships, we provide our premium weekend analysis, very similar to the analysis that you've just watched. We provide it every weekend to our clients and members. We provide a halftime analysis every single Wednesday, which is a bite-sized chunk of what you've just watched. We've got an incredible investing and trading network community, whatever you want to call it. We also provide trade ideas, we provide charting support, and we also provide full access, completely free access to our technical analysis program. So for those of you that are maybe looking to learn technical analysis and also have the benefit of some charting over the next 12 months, you can come in and obviously learn technical analysis as well. But something that I'm very, very unique at with my work is I publish everything on our website. Now, just to walk you through a few of our recent trade ideas that we've provided. This is a recent one, for SailPoint Technologies. This is one for Penn Gaming when we covered it above 78. We called for profits between 96 and 100, which again ultimately proved to be the case. United States Steel was a massive winner. We're up at, I think we hit $20 in the end on this one in just a few weeks. Peloton above $100. It went to 140 before it pulled back, and obviously now it's up at 150, 160. Plug Power again above 1450 was the initial call. This is up at, like I said, $35 at the moment. But I record every single trade idea that I have ever put out on our website, so feel free to go and check that out. It's all published on our website. We've just updated everything, and clearly, it's been a massive year of outperformance across the board. Don't take my word for that. This is one of our members, Arpan. One thing to say, that this isn't a typical return. I think the fact that I was able to get everybody defensive ahead of the market crash, I think that's enabled a massive amount of outperformance. The individual in question here trades both stock and options as well. But again, I think you just need to look at the equity curve over the course of the last 12 months. This is another one of our members, 2 years in a row, one of our clients actually, second year in a row, over 100% again, stock and options. This is one of our I guess, results. Again, this is just one result. Massive performance on one options contract. Again, another one of our members here doubled their account. They're actually up at around 105 now. But yeah, it's a really incredible network that we have here. Again, another one, massive performance on options on one of our alerts for United States Steel. So I think if you're somebody that struggles with technical analysis and maybe you're looking to get away from day trading, maybe you're looking to learn technical analysis, or maybe you're just too busy to filter through thousands of stocks every week. I know what it's like, family, jobs, you know, a lot of us just don't have the time to run through everything. But I think if you're looking to align yourself with, you know, more of a trend following approach, elements of swing trading, and just be part of a really cool place, and you know it's only $500 annually, and you know, I'll let you go and do your own due diligence. But that's really all I wanted to talk about this week. I hope the market is kind to everybody through the month of January. This will be our only upload, I think, to social media this month. I will be back next month at some point, I would imagine. Unfortunately, my time just doesn't allow me to do this every single week anymore. So good luck with the markets, and maybe we'll welcome you soon. As always, thank you very much for watching.